So that alone on a 8:30 news day is kind of, it shows you it's poor price action. And then even this failure swing at 9:30, we didn't even get a true expansion all the way up. So I'd like to see how this order block is held, and then look for the sell side. We also have lunch low from yesterday too. That can be the draw. Preferably, yeah. This is just an IO fit up here. Excuse me. Hour felt like forever. I know. That's why, like, sometimes it's good to trail stops. On the other times, you just got to keep your stop at break even, and unless it's really displacing above and reach 75% of your target, there's really no point in trailing it continuously. I am looking for the sell side. If there was another point, then we could actually do this really quick. Down to 1. That's your symmetrical expansion target if you're using the wick of the 8:30 news and the sell side target after that. But anyways, so candle are closing a little bit more bullishly than you'd like to see, but like I said, I only see a wick into this gap preferred, and then either continuation lower, or we got to see how we close regarding this inversion gap here. Equal lows and equal highs. I know it's. I mean, dude, I would assume we're not. It's not even like it's super elite. I can't speak. It's not even like it's super inefficiently delivered from this low to the high. Like we expanded lower. We've got this gap that we probably want to fill going to 950. Other than that, this gap in here was efficiently filled all the way down to discount. You can see it wicked back and forth. I thought we were going to actually expand from here. The fact that we're tracing cycle time frames and cycle the charts. Got a gap in here. We're holding mean threshold of this breaker actually. Extend this out. This is your breaker block. Make sure the DXY is trading up. So DXY is dumping off here. So I think it's pretty low probability, which is surprising for an 8:30 news day, the first one of the week. And if you look at this target here, I'm surprised that we have not moved a lot during the overnight session. I would assume that if this Wednesday was the high of the week, that we'd target the sell side and close into it going into Friday. But the fact that we're still kind of holding this gap in here, right next to the buy side, on the 1 hour at least, candle body still closing bullishly, right? We've not put a candle body within it. Wicked off, wicked off. All these are wicking off. So it's difficult for me to identify the true draw on liquidity right now. On that, it looks, yeah, like you said, it's relatively equal. We've buy set up here, and London and PM high. And normally, if you saw this London protraction up here, taking out Asian and tapping into a higher time frame gap, you don't want to see this much of a retracement going into New York. Like if we wanted to see a retracement, we just tap into 50% of the stealing range right in here, and then we close past below this, use that as inversion, then continue to sell off into the targets. But here's your 950 macro. Build it all the way up to the premium end. Like I'm liking shorts more in this scenario, but I do want to see DXY start to climb. That's the only problem. Take out this low, relative lows on there. Yeah, we're starting to close through. Holding the bullish order blocks as well on the way up. Wick. Wick all the way through. So since we have 8:30 news, if we really don't get a trade set up here, I'm tempted to just close it off for the day because silver bullet hour typically with an 8:30 news driver is not um isn't the cleanest. And per rules, I just don't like trading within the silver bullet time when we have a Judah swing here. So don't get a setup, probably just be done for the day. What's the DXY correlation on indices? Is it inverse? Yeah, it's inverse correlation. So NQ, ES, YM all have positive correlation with each other. Excuse me. And DXY most times is going to be inverse. It's going to be highest probability when it's inverse compared to the indices. If it's not, and they're all doing the same thing, a lot of times that means that, or if DXY is consolidating, then you like if DXY here is consolidating and NQ is expanding up, that means as soon as DXY starts to flip or one of them starts to flip, then you can expect expansion in the other way. So it's useful when there's low probability conditions in the market and you can anticipate as long as DXY is moving in the opposite direction you want to see. Like in this case, we've been expanding lower since 845 and we've had basically no correlation with the indices since then. So we've traded all the way through up here. Might have to just wait for 10 a.m. Yeah, no intention to go anywhere. It is a very difficult day, I think. But normally, yeah, like with an 830 news driver, if we had wicked a little bit lower, I would have liked that. The fact that we only wicked it here by a tick, we did have SMT, so I was counting that as a true sweep of liquidity, right? So we have SMT at the lows compared to NQ. So then once we expand, see the market structure shift over here, I mean, breaking above obvious swing highs, expanding with displacement, then you can enter long either within this gap or using time, the macro at 850. So if we've closed all the way above this and this is pretty efficiently filled. Let's check the time frames. Yeah, on almost every single time frame it's filled except for the 4-minute, which I'm fine with it leaving a gap down here. So if we were to retrace back into this, look for it to be used as inversion. Just wait for 10 a.m. here. GX5 moving lower, so could actually, I'm tempted to take a stab long, but this range on a Thursday or even on an 8:30 news day is so small. Like 15 points up to here, and I would expect this to be 30. I'll take a stab long, put it to low. I don't know how well this is going to play out, but we'll take it just for the stream. Got full closure all the way through here. Disrespect of the breaker. We've got this now being used as an inversion breaker if you really want to use it like that. Like to see it hold here. And then candlelight should not be placed 50% below below 50% of this gap now. Targeting about 15-ish points. I know it's not 20 we normally do, but right above this bicep, we could get a retracement after that. So I'm fine with scalping it and then being done. Let's see, we've got no really inefficient delivery up here too. So preferably if we close above this order block, used as actually could be used as a propulsion block. So if we close above, I'd like to see speed if we were to ever wick back into this. What actually is the 20 points? I'm curious. Let's not get greedy. Although I do like the stack liquidity up here. So we close above. Preferably you want to see speed off this gap or off this order block. I would say this is a propulsion block just because we're approaching this wick and we actually held the wick pretty well as an order block. So normally you'd like to see it approach a candle body. But since it's holding this, we have an order block and a consecutive order block afterwards. So I'd like to see speed off this. Also took out short-term sell side. Turn on Jim. You still have this down here. I'm watching. Oops. So this already, the fact that we're wicking all the way through this propulsion block here is the first PD array that we're basically breaking. If we don't get a reaction higher, so that's one. Got an implied fair value gap here, another gap over here that we've closed above too. So really, price should not ever touch 50% of this. I would assume that if price starts to dip lower, we probably will come all the way back down. We do have, actually, let me move this back to the bottom. We do have this portion right here I'm watching too. But you can see, yeah, it's already closing below. I wouldn't even want to see that. Got stopped out, took long off the order block. This one right here, yeah. We'll see. If we don't get displacement here in the next 10 minutes, 12 minutes, I'm probably just going to be done for the day. I don't like the fact that we're already chopping with the first hour and first opening range. We've had no expansion in a direction to treat as even as a 930 expansion, let alone a Judas swing. We've already taken up buy side and sell side. It almost looks to me like seek and destroy. It's difficult to tell. I mean, even on a Thursday. Oh, 955 order block candle. That would have been a nice. I like it. Nice propulsion block trade. Stop at the low of it. It is a tight stop though. All right, so close above here for sure. I'm not seeing anything besides the 2-minute wick maybe or this 3-minute wick. I'm looking over here. This is where I'm looking. If there's any inefficiencies in this area. This is also your original consolidation if you zoom out, right? Original consolidation. About first leg, second leg, smart reversal, expansion up. You have your 5-minute breaker in here. Pretty much holding. I didn't even see that. Nice 5-minute breaker there. And expanding up. So we're already, we just took out buy side. We just missed fill by a tick. Jam this and stop and profit. Let's see. Of course. Why wouldn't it, right? Well, wanted to see, normally when you see a buy side or sell side sweep, I like to see it pierce above relative equal highs by 5 to 10 points. So that was the context for just putting the limit order up there. Obviously, you're probably just going to run up again, but you get the idea, right? Nice little scalp with the macro. Not 20 points, but 10 AM reversal would be nice. That's true. Let me take a screenshot of this really quickly. Send it over to Bridge Share. You can see the little scalp I took on the E50 macro. I actually closed it out. Basically, I break you. I didn't like the fact that we weren't expanding here. Mid-eyed open hit too. Oh, yeah. That's why when you're scalping it and it's not feasible for 20 in this case, I mean, it is feasible for 20 if you wanted to actually take it from this order block here. Probably would still get 20, but when the buy side's like here, you don't know if you're going to retrace like this. Right, this one candle came and stopped us out. is something I need to work on, is stop management. I feel like it's been lackluster so far. Looking like no entry from me today. Let's see if this creates a reversal here. In order to create a reversal, let me actually clear some of this stuff up. To create a reversal, I would need to see expansion probably through this order block again, if we're reversing at 10, but I already don't like the fact that we're approaching the buy side liquidity. We've got more over here, but we're decently close to it. We're already in premium. So and we're pretty close to these stack liquidity points. So I don't really think we'll reverse coming off of 10. And it almost looks like, yeah, I agree. Thursday high of the week. So the fact that we didn't displace lower, if we want to put this Wednesday high, I assume we're just going to expand up classic buy day. Except the only problem I had with that yesterday is the fact that Tuesday low didn't put in low of the day or low of the week. I guess if you're looking at candle bodies, then it did technically, but wick wise, you're always going to be counting the wicks on something like a higher time frame. So yeah, then classic Monday open, Tuesday up to Thursday, and then TGIF into Friday. An order block here. Didn't close above the wick, close above the candle body. This here is a perfect example of what you want to see with an order block. Close above it, wick down, comes up and closes bullishly. So order blocks and for value apps can be used with their candle closure the same way. So if we, like in this case, right, I wanted to see this consequent encroachment level untapped. We didn't come back and touch into it. Candle is closing above and then staying on the top end. Same thing with order blocks. If we're bearish and we came up to this breaker, these candle buys should be staying down here. This candle buy already closing and closing all the way through to mean threshold is already a first sign. So good stop management is always going to be anticipating those kind of things. And even if you have a stop that's wider, when you start seeing those kind of things like the break or the propulsion block that I mentioned, the fact that we closed through it, you wanted to see a quick expansion away. Otherwise, you probably could stop it out as soon as it hit the consequent encroachment with the IPG. You can see here the candle buys are staying pretty bullish. Let's see if we can pop through. And that's would have been the order filled. We put in this 1 hour bisi in the 1050 macro. Might look for market maker buy model to the highs. This one down here. The fact that we're pretty bullish, I think. I like the market maker buy model to the highs. I think if we were to retrace back into maybe this breaker here from 4 a.m. going back into London session basically. So if we were to expand up and then come back down into either this breaker in here, tap that would be a good macro trade. Obviously with time. There's your London high too. But really nothing high probability, I think. That's a difficult trade to enter on for sure. Using the inversion breaker, like when have we used one of those before? So normally, if you have a trade like this, right, on a 9:30 equities open day, this would be, by the way, we already took out buy side, so watch for retracement back into discount. But came up, took out buy side. If we had swept this right at 9:30, then displacement lower, we have a breaker, tag short there. So it's going to be, with your model, it's going to be in order, right? So if we don't have a liquidity sweep and we have a breaker that forms or a market structure shift that forms, we have to be careful taking the short. Unless there's SMT, I wouldn't trust that as a liquidity sweep, right? Like just because we got close to it doesn't mean that we swept the liquidity. So this kind of displacement lower. Normally, yeah, that would be a nice short going to the macro time, targeting the relative equal lows here and into the rest of the targets we have lower. But since we just didn't have the liquidity sweep, you can't trust the breaker forming. Instead, this could just be retracing back into some sort of gap that was unfilled. And if you probably zoom out, there's probably a 5-minute, 5-minute gap and the volume balance down here that was untapped. Obviously, it's pretty far into discount for sure. It's still good to watch though. So you can make exceptions for your model. It's got to be written down. Otherwise, it's really something you shouldn't take. Previous day high is a nice target, but the PA though, I know this PA is nasty. This is probably the worst we got all week, and we're anticipating it to be the best. Yes, so close to all-time highs, but I think tomorrow should be clear. I think previous day high, then reverse if you hit all-time high on ES. We'll be going to the PM session. I like it. I mean, even look at this market maker pattern on the 3 or the 5. You can zoom out too. It is quite weird. Like we were holding the bullish breaker in here. If you want to really use that, this up closing candle. It's just if you were to take this as a trade, I would go long here and then stop probably as we trailed it up. I would jam it probably into break even. Anyways, watch this 5-minute order block too. But like I said, we're going into silver bullet hour. Typically, you can expect it to be poor, but the fact that we've just had extremely poor price action, you could see expansion. I'm not going to trade it at all, to be honest. Already took the win there and would have been a win over here. Yeah, just take a look at ES. This is some nasty stuff, even since 8:30. Missed the buy side up here too. There's a wicks back and forth. It looks the same. Like since equity's open, it just looks the same as pre-market. Got CPI and PPI next week. Oh. Hopefully, yeah. I feel like that should be clean, right? Wednesday CPI or Tuesday CPI. Let's see. Can't even see it. I'm watching this level right here. This would be your change in state, I guess. Or technically this would be, but I'm watching this as your change in state. Just with double liquidity, we had SMT with ES at London high. If we hold this and expand lower past this swing low, move this really quick. Like kind of like we're doing. I watch this as a market structure shift. Tuesday CPI and Friday PPI. Normally the day after. I didn't know that. Yeah, so you can see the SMT here too. Right, we had SMT with London, second SMT with NQ there between these highs. Taking like 4 trades. Hey, that's good risk management though. If you can if you're able to do it in this difficult time, then I think you should say something about it. So we held the CISD point. You can see the candle buys closing bearishly there. And we're starting to expand. Let's see if these are popping up. All right, these are starting to pop up. Right outside the macro time, though. Let me just do something really quick. All right, there we go. All right, so technically these should be held as bearish order blocks. If we cycle time frames from looking from this low to this high, are there any inefficiencies? Well, yeah, there's a pretty big 4-minute I'm watching. This one right in here, which only needs selling. Technically, if you're looking at this one originally, this takes priority, right? And then we expand up. So we technically just need selling through it to be efficiently filled. So we could actually form a breakaway gap through there. If we were, I don't know. It just seems so 50-50 to me. Like I can argue both sides in the market where I don't want to be in it. I would be surprised if he caught anything. I think the only really clean trade was this 850 macro long. But I mean, if you were managing stop, it probably was a little bit difficult. I would just say stay out of this. It's not really anything you're missing out on. There's no reason to force a trade in poor conditions like this. They're holding that level pretty well, though. Yeah, but to me, this is just like I've got two biases, or I've got two drawn liquidities. I've got just levels I'm marking out as we go, just to see how we react to price. I hate being reactionary. As soon as like it's low probability, for me, the one sign that I can tell, other than like taking a loss or if it's like extremely just poor like this, is if you become reactionary to price. Like if you have a clear drawn liquidity and price is doing what it's supposed to be doing with time associated, it's very, very clear and very easy to take a trade, right? As soon as maybe it misses a drawn liquidity, right, and retraces all the way like this, forms a breaker, then okay, now our drawn liquidity is down here. Then we trade up, the drawn liquidity is up here. Trade down, now the drawn liquidity is, just back and forth. Like as soon as you flip DOL probably like 2 or 3 times in a session, I would just say it's already low probability. Like you should know where the market is going. At least if you've been studying for a while and you're familiar with these macros and what the AM signatures are supposed to do, you should know where it's going like maybe 10 to 20 minutes beforehand on a high probability day. Took 850 long on demo, but we didn't reach that 17,853 level. Oh, 853. Have missed stop to break even. Yeah, like this lack of precision here for basically no reason that I can see. Like we're not even bouncing out of a gap. Unless this is a macro time. I guess you can. Is this an example of the macro liquidity here? taking out this high instead of this high. Settings, yeah, I don't know. I mean, maybe it is. 850 low too. If you mark out of the macro session liquidity pools. Here's your 1009 low. Now, can we go for the AM high? I'm going to screenshot this. I'll send it to, just so we can make a new Q&A post. But let me actually mark all these out. $901. Let me send this to prediction share really quick. And let me make the Q&A post. So if you want to add anything for the macro liquidity or macro high, right there. That would be your 1005 high, so still within macro high. Since I'm so new, I'm curious, does PA get very precise in the next couple of months of only trading crap PA? It should, yeah. Like, we should already be February, second week of February, which I guess is what we're in. Or I guess we're in first week. Second week of February onwards until basically August, I want to say, should be clean price action. It's so weird though, yeah. Like, if you're new to trading or if you're just new to the streams, it's so weird having multiple months where it just looks like we're just going back and forth with everything. It's very, when it becomes clean, like even this week, I hope you could see earlier this week, like there was a little bit more precision compared to January. Like it was doable, but it wasn't precise. Like with time, like we were able to get some trades. Like this 9:30 setup was beautiful. I mean, the rest of the mornings for the week, I think we're pretty clean. Run up here with 9:30, shake the breaker setup, but like even here, like this poor price action here. Like if you go back maybe on FX replay or if you have screenshots from last year, it's just you'll see a market maker model like almost every single session. It becomes very clear. Like it does exactly what it's supposed to do. The PD arrays, like imagine if all of the PD arrays that you want to be held are respected in the perfect manner. Like it's here, it's like we're allowing for some lack of precision, but like as soon as the propulsion block is made, we're respecting 50%, closing above, shooting up to buy side, maybe retracing back into the gap and flying back up, maybe taking out an internal range. But it's so like here we have this macro trades up where obviously we're trading into a gap. But as soon as we trade above the gap, come back down, respect the order block, we should fly up here all the way to buy side. Maybe retrace a little bit back into this gap, stop at the low. Like there's so much lack of precision. But yeah, well, I think next week with CPI, PPI, high impact news drivers, the worst PA. Yeah, December was terrible. But I mean, if you're able to, I think if you're able to learn from here or just study this and trade it, what you get as a result is when the clean PA happens, it's going to be like super, super, super fun and quick, low resistance liquidity runs. I mean, that's kind of like the 2022 market was. If you were in the markets or learning in 2022, the entire year for the most part in 2022 was pretty poor. It's cleaned up since then, but I actually didn't look. Let me go back. So there's your high again, broke out. I'm gonna see if yes, we still have SMT there. We'll probably call it quits. Let me just. I want to see this session liquidity really quick. 835, 855. Big. I've got this one. Let's see. Wasn't tapped after that. I don't know what qualifies for the liquidity to be met. It's something we got to backtest over the weekend. Not like we're retracing off once more. It's actually pretty heavy displacement. We're replicating it here on ES. See if DXY is popping up. Why I'm starting to dump off too. If we can close through there. If. It's all ifs today. It's just back and forth. I don't really like it, to be honest. That's pretty heavy displacement though, for sure. Section in here only with selling now because you're retracing back up. Frustrated that I didn't start my challenge in December. I realized it, and now it's taking me a long time because of the PA. I mean, like I said before, if you're able to stay solvent and take good trades and be disciplined to not take anything poor, I think that's extremely impressive. I think that's more impressive than trying to pass it in a week, right? So I give props to you. Let's see if we can expand. If we leave this as an inversion, then we could be targeting. And this is pretty efficiently filled. We do have a 3-minute gap, actually, or the 4-minute gap too. And then layer this on top. Yeah, once again, pretty poor price action. And the fact that we're tracing here could actually be a market maker buy model up to the high again for 10:30 to 11, but I don't like it. And we're flipping bias back and forth, so we can just end the stream early today, I think. I don't want to take up too much more of your time. There's other things you can be doing than staring at these pretty piss poor charts. So if you got any questions or if I see anything that's solid, I would say, or I'll send it out to predictions chat. Otherwise, have a great rest of your day. I will see you guys, Lord willing, tomorrow. Yeah, let's hit the gym instead. And enjoy the rest of your day. Peace.